The way we think about money is on the verge of a fundamental change. Between today, December 21st, 2025, and the year 2035, the financial system will undergo a deep and lasting transformation. This is not about the rise or fall of a single digital currency. It is about the very rails on which value moves. The money of the future will be more digital, more programmable, and constantly active, operating 24/7. This evolution is not a distant theory. It is happening now, driven by specific technologies and the institutions adopting them. The next decade will see these nascent ideas mature into the backbone of a new global financial architecture, changing everything from cross-border payments to how we own a piece of a company. The first and perhaps most profound shift is tokenization. This is the process of creating a digital representation of a real-world asset on a blockchain or distributed ledger. U.S. Treasury bill, a share of stock, a piece of commercial real estate locked in slow systems, fragmented systems, siloed systems, intermediaries, paperwork, delays that can last for days. Tokenization breaks these assets free. Digital tokens make assets liquid, easily transferable, programmable, moved anywhere in minutes, not days. Settlement becomes nearly instantaneous. This shift matters. Immense economic potential. Fractionalized ownership owns tiny pieces of valuable assets, a skyscraper, a rare piece of art. Democratizes access, not just for the wealthy, used as collateral in automated protocols, more efficient lending and borrowing. Small business uses a tokenized invoice as collateral for an instant loan. Programmability turns static assets into dynamic instruments. They can be put to work 24/7, creating new markets and opportunities. Ondo at the forefront. The second major shift is the move toward a multi-rail payment infrastructure. Today, sending money, especially cross-border, is slow and expensive. Wire transfers can take several days to clear. They often involve multiple correspondent banks, each taking a fee. The future won't be one network that replaces all others. It will be interconnected networks, or rails. Payments will be routed along the fastest, cheapest path. FedNow, stablecoins on public blockchains like Ethereum. Specialized settlement networks for fast, low-cost settlement between institutions. This dramatically lowers friction in global commerce. Individuals, remittances as fast and cheap as email. Small businesses, pay suppliers instantly without huge fees or currency spreads. Large corporations and banks, manage liquidity more efficiently, no need to pre-fund foreign accounts. The global economy becomes more dynamic and inclusive. Value flows like information. XRP is one project building core multi-rail components. XRP Ledger, a neutral bridge asset for cross-currency settlement. Example, a U.S. bank converts dollars to XRP. It sends XRP to a partner bank in Mexico in seconds. The Mexican bank converts XRP to pesos immediately. This avoids slow correspondent banking. Stellar builds a network for asset issuance and payments, empowering anchors to issue digital fiat tokens. The third, and arguably most critical shift, is the role of regulation. For much of crypto's history, the industry has operated in a gray area with unclear rules and a constant fear of enforcement actions. This has kept most large, conservative institutions on the sidelines. The next decade will see a dramatic change. Regulation will evolve from being a barrier to being a gateway. As governments around the world establish clear legal frameworks for digital assets, stablecoins, tokenized securities, it will provide the certainty that major banks, asset managers, corporations need to enter the market with confidence. This clarity is the key that unlocks institutional adoption. Large financial firms operate under strict compliance and risk requirements. They cannot and will not engage with technologies that risk legal or reputational damage. Once clear rules are in place for custody, issuance, trading of digital assets, these firms can begin integrating blockchain into core operations. This will bring trillions of dollars of capital into the ecosystem, not for speculation, but to improve services, cut costs, and create new products for clients. Regulation, therefore, becomes the on switch for institutional finance. Hedera is a project that has built its entire strategy around this principle. From its inception, Hedera has aimed to be an enterprise-friendly public ledger. Its unique governance model, overseen by a council of large global corporations like Google, IBM, and DWS, is designed to provide stability and long-term vision. To bring these abstract shifts into focus, let's look closer at the 4 projects that embody them. Each has a distinct role. Each has a reason it matters. Each has specific signals to watch for. They are not direct competitors. They are specialists in different domains of the new financial architecture. This is not about picking a single winner. It is about recognizing that a robust financial system requires multiple specialized layers working in concert, from deep settlement rails to consumer-facing applications. First is XRP, which is laser-focused on being a liquidity and settlement bridge. Its primary role is a neutral asset to enable instant, cheap conversion between currencies, cutting cross-border payment cost and time. Watch tangible adoption and on-demand liquidity volumes. Main risk is regulatory. While some clarity emerged in 2023, other jurisdictions are still evolving. Next is Stellar, designed for payments and asset tokenization. It empowers anchors to issue digital representations of fiat and assets, crucial for remittances and inclusion. Watch Sorabon's app growth and real volume. Risk: competition from larger platforms or direct stablecoin issuance. Third is Hedera, aiming to be the enterprise-grade public ledger. It targets secure, high-performance infrastructure for institutions, key to the next phase of adoption. Watch repeatable enterprise use beyond pilots. Risk: long political enterprise cycles can slow adoption. Finally, Ondo specializes in compliant tokenized products. Watch assets tokenized and expansion beyond Treasuries. Risk: regulatory and custody frameworks. These 4 projects are not islands. They are complementary pieces of a new, layered financial stack. Think of them as specialists operating at different levels of the financial system. Just as the internet has distinct layers for cables, data routing, and applications, the future of money will mirror that structure. At the base layer, we have the settlement and payment rails. This is where XRP and Stellar operate, the financial equivalent of TCP/IP, moving value from point A to B efficiently. XRP optimizes interbank, cross-currency settlement. Stellar enables issuance and payments for fintechs and remittances. An international payment might route through the XRP ledger for conversion, then onto Stellar for final mile delivery. Above the rails sits enterprise infrastructure, Hedera as the secure industrial park for corporate digital operations. From tamper-proof supply chains to tokenized commercial paper managed by bank consortia. An asset tokenized on Hedera could still settle via XRP or be distributed on Stellar. At the top is the asset and distribution layer. Ondo uses existing rails and platforms to create products people and institutions use. Ondo creates the asset, Hedera provides secure infrastructure, and XRP and Stellar move it around the world. The transformation of money from 2026 to 2035 will be a story of infrastructure being built. Less frenzy, more rails, trust, and real products. 5 things to watch monthly: regulatory milestones, real transaction growth, institutional distribution, tokenization breadth, developer and liquidity metrics.